Hi, everyone, and thank you very much for inviting me to the Open Banking Week. I'm very happy to be here and share with you my vision and activities about redefining the relationship between financial institutions and aging and older adults. Let's move on to my presentation. My name is Dr. Ira Sobel, and I'm the founder and CEO of Fintech for Longevity. We are a research and consulting company that help financial institutions redefine the relationship with aging and older adults. Our mission is to unlock the potential of the 50+ segment of the population, but more importantly, to improve the financial well-being of midlife and older adults. We combine between the financial aspects, a longer life, and also innovation in finance. How do we do this? We unlock the 50+ segment of the population by data-driven segmentation, aging-related ecosystems, and we also help in designing for older adults. My presentation today consists of 3 parts. In the first part, I will speak about the global trend of aging from a demographic perspective. In the second part, I will elaborate on the new ecosystem of aging and longevity-related fintechs. And in the third part of the presentation, I would like to share with you my view about the future of APIs and open banking, and how they can better help financial institutions unlock the potential of addressing the financial needs of aging older adults and their family caregivers. So let's move to the first part of the presentation. As you see in this graph, in 2010, in this graph, there are some more, but in this graph we see Italy, Japan, and Germany that are super aging societies. What are super aging societies? They are those that the proportion of the population of 65+ exceeds 20%. But while in 2010, Germany, Italy, and Japan were super aging societies, in 2050, most of the world will be super aging. But also emerging markets and developing countries are in this trend. Look, for example, at Mexico. Only 6.6% was in 2010. But in 2050, Mexico almost reaches the 20%. So, and look at South Korea, for example, where it was 11%, is going to be more than 3 times higher in 2050. So the big takeaway from this graph is not only the proportion of the older people in the population at a certain year or a certain point of time, it's also what are the differences in the rapid demographic pace of aging as in Mexico and South Korea. So we have to take into account both the proportion of the elderly, but also the pace of this trend. Now, what are the economic implications of this demographic trend? In a process that we call individualization of risk, people have to take more responsibility of their own longevity. While the country takes a back seat, we will see more people that have to take care not only for themselves, but also to their loved ones. From a macroeconomic perspective, the trend of aging affects a reduced supply of labor. We will see more generations in the workforce. Privatization of pension and the cost of care is increasing all around the world. So people will have to extend their labor market participation and find new ways to provide for themselves also when they're old. We also have to take into account the gender differences in the life expectancy. And from a broader perspective, aging is associated directly with the feminization of old age. And the state have to make sure that they have adequate resources to provide people, especially from the lower part of the income ladder, with adequate social security. So as we see, aging is associated with a lot of economic risks, but longevity has also many opportunities as extended labor market participation, but also experiencing meaningful relationships and better health for longer periods of time. So there's a tension between aging as a risk, but also longevity as a big opportunity for humanity. As we know, the financial sector has experienced mega trends in the last decade. The major one was a digital transformation, often marginalizing older people from the economic life. Indeed, regulators took into account this change, and often, like the regulator in the UK, had initiated guidelines for financial institutions to take care of vulnerable customers, among which are older adults. But is this enough? Are financial institutions ready for the rapid demographic trend of aging? As we know, there are many questions of digital accessibility and financial literacy, but this is not enough. From a broader view, financial institutions will have to find the right services and products in order to help aging society to navigate longevity. Financial institutions will have to help families and households in the cost of care. We'll also have to address the family through the new goalkeepers of the families, which are the family caregivers who take care of their loved ones. Financial institutions will have to find new models of calculating the longevity risk, but also helping households to take care of their longevity financing, either through life settlements or housing ownership. Of course, retirement planning has to be very much advanced, and financial institutions have to help to democratize retirement planning, which is now only or mostly affordable by the affluent. End-of-life planning is something also very important. While the affluent people receive this service in family offices, end-of-life planning has to become more democratized, and to see how succession of wealth is transferring from one generation to another. From those from the lower part of the income ladder, financial institutions will have to help aging and older adults in the utilizations of insurance and medical rights. So the role of financial institutions in aging society is, in my perspective, is going to change, not only in order to unlock the potential of new growth products and services for this population, but also as a social player in improving the health, the financial health of this segment of the population. Social role is not enough. We have also to take into account the role of technology in advancing and in improving financial health. In the last year, me and my team, we've researched a new ecosystem around the world of new, very interesting and important fintech solutions for the protection, planning, financing, and monitoring the finances of aging families. Protection mainly against scams and fraud, fintech solutions for retirement and end-of-life planning, new digital solutions for longevity financing like reverse mortgages, but also many concierge services that help family caregivers to monitor the finances of their loved ones, which sometimes suffer from a cognitive decline. This fintech ecosystem is very important in terms of the preparation of the financial sector, the financial industry, in the demographic trend of aging. There are many new companies, sometimes backed by large VCs, that are starting to operate all over the world. And I will give you several examples. Anti-scam and fraud technologies that address this huge phenomenon of older people who fall into scam and fraud. These are new technologies that help distinctly to protect older adults from their own vulnerability to this phenomenon. Other digital solutions for estate planning and end-of-life planning will help to democratize the financial preparation of end of life. But also managing and monitoring finances is important, among which we see more startups in the areas of exhaustion of rights, affordability of healthcare and life insurances, but also helping family caregivers to manage and monitor the finances of their loved ones. About longevity financing and taking their own risk of the longevity risk, we see more digital solutions for late life employment, house sharing and home sharing in order to generate income also in retirement. Life settlements and reverse mortgages are also expanding more than before. Robo-retirement have a lot to offer to people in the ages of 50 plus. Some of them are B2C, some of them are B2B, but the preparation for longer life and the preparation of retirement, even sometimes driven by gamification and scenarios, are becoming very important for people to make sure that they take the right decisions in order for them to maintain their desired economic standing after their retirement. So now, given the demographic trend of aging and the new ecosystem of fintech-related aging and longevity solutions, I would like now to move to the future, as I see open banking and the platform economy as a driver for a new relationship with the needs of older people. As I said before, the role of technology or open banking for longevity has three parts: to protect older people, to monitor their daily finances, but also to find solutions for financing a longer life. How will the financial services look like in the era of open banking and longevity? Let's move forward. On one hand, we see longevity, digital longevity resources. And on the other hand, on the demand side, we will see older adults, family caregivers, but also longevity planners. Those are people that are usually in the age of 50 plus that start to think about the future. But this platform, based on digital and longevity resources, are going to be offered to the demand side, either directly or through financial advisors. So digital longevity resources are going to consist of bill management, utilization of healthcare rights, solutions for late life employment, reverse mortgages, estate planning and digital vaults, caregiving referrals, and anti-scam and fraud solutions, either through open APIs or a super app. These platforms can be all aggregated and give families a more comprehensive overview on their finances, but also about their futures. Taking all together, this platform can then be offered through banks and insurance companies to older people and their family caregivers. But financial advisors have to take into account all these longevity resources when helping families to plan for their future. As a result, digital longevity resources and longevity planning will be democratized, and more people can be well prepared for a longer life. Not only it will be the premise of affluent people. Now, the digital longevity resources can then be expanded also to lifelong learning and education. So everything to do with life will be all in one place. This is not enough. Providing the right solutions, resources, or products through the financial industry to caregivers, older adults, and longevity planners is not enough, because longevity is a long journey, and therefore we have to take into account life course transitions and events at the same time. So what is the customer journey of aging? And how can financial institutions help families and individuals to navigate their longevity? By helping them at the right time when life circumstances are given the life circumstances at a given point of time. So the questions that financial institutions have to ask themselves in order to help the customers is to help the customers have answers for the following questions. How can I plan for longevity? How can I mitigate the cost of caregiving? How can I navigate my changing health? How can I navigate the transition to retirement? And how can people navigate a loss of a spouse or a parent? And how can people generate more income in retirement control on their finances, and feel safe. So financial institutions are ready, in my perspective, for this demographic trend only once their customers have the right answers for these questions. So let me summarize. As we saw, the trend of aging is a global phenomenon with differences between countries, especially in the pace of aging. There is a thriving ecosystem of aging and longevity related fintechs that help directly older people and their family caregivers to take care of their finances. Financial institutions have now the opportunity to redefine the relationship with aging and older adults through these fintechs and providing customers a comprehensive customer journey that takes into account life transitions and events in the areas of health, employment, and marital status. That's it for today. Thank you very much. And please, you're invited to approach to us, and this is my private, and this is my email. You are invited to reach out for more information about how can financial institutes be well prepared for the demographic trend of aging through research and innovation. Thank you very much.